Hi there, welcome to Nepi Invest. I did a video on Nitro Software. This is a company I have held in the past, but I recently sold out in the past month because I had the company on a bit of a short leash, and I was always going to take profits as soon as I saw sentiment in the company shift. And we have seen that in the past month, and that's why the share price has dropped 40% in that time period. So it seems like the share price of this company has moved into at least a short-term downtrend, and how long that downtrend plays out, well, who knows, because we're talking about their future, and the future has a lot of possibilities. But because the share price is in that downtrend, because of that negative sentiment, one of my philosophies when it comes to this company, just like many other companies on the ASX, is to not hold the company when we have that negative sentiment, when the share price is in a downtrend. And if I see signs of the sentiment shifting, of the share price moving back into an uptrend, I might take another position in this company. But at this point in time, I'm not sure how far the share price has to fall, because there is a lot of negative sentiment with this company right now. So before we have a look at the latest appendix for, say, the financials of the company, the chart, and the cash receipts history, just a few facts in regards to this company. First, looking at their business model and what they actually do. Nitro is one of those sexy SaaS companies, and that's why when you have a look at the valuation, it's quite high, even though they are not profitable, not operational cash flow positive. This company was formed in about 2005, and the main goal was to provide the world with better tools for everyday work. So they do have three pieces of software. Looks like, I think the most popular software is their Nitro PDF Pro, and that is used to create, edit, sign, and secure PDF files and digital documents. They also have Nitro Sign, which is all about e-signing. Also Nitro Analytics, which was all about intelligence and insight. So if you do want to have a closer look at some of their solutions, some of their software, I do recommend going to their website, and you can have a glance and have a look in regards to exactly what they do and why it might be helpful for you. For me, I'll probably never use Nitro software because this is aimed towards businesses, and at this point in time, I do not own a business. Nitro was formed or founded in 2005 by Sam Chandler, maybe someone else, and he is the current CEO and has 5.1% holding in the company, so a little bit of skin in the game there. It listed on the ASX 11th of December 2019, just before COVID-19, and the share price did take a fair big hit from the COVID-19 panic, but recovered fairly well. We'll be able to see that when we look at the chart. Some of the larger shareholders, in fact, the largest shareholder is Michael Brown, who is a non-executive director, or maybe he's an executive director. He has a 7% stake. And Australian Super, they have a 5% holding in Nitro Software. Current market at $2.40 is 620 million. And this is after share price has fallen 40%. And this is the reason why I had Nitro on a bit of a short leash, is simply because of the valuation, which means the upside to the company was not as great as the downside, in my opinion. And that's just my opinion. And the ticker code for Nitro is NTO. Now I'm just going to look at some of the financials of the company. And the first slide here is looking at the half-year numbers that they did release in August this year. The full-year numbers will be released in February. So they have a little bit of a different reporting cycle than a lot of other companies, and they do actually report in US dollars. So revenue for the half year, 24.1 million, increasing 5 million from the previous half year. Nice growth, but I would prefer a little bit stronger growth. Now, the company is not operational cash flow positive. In fact, they're operational cash flow negative by $4.3 million in this half year, and were loss-making by $8.6 million as well. But again, this company is in that sexy SaaS space, and a lot of those investors who invest in companies in this space don't really care about operational cash flow and profit. The main things they're concerned about are revenue, in particular annual recurring revenue, which for Nitro at the end of the half year was 33.8 million, a nice increase from the previous half year 1 year ago, which was 21.6 million. That's a 50% increase in annual recurring revenue. Have about $40 million of net cash. And when you look at the price to sales ratio for the trailing 12 months, so this is looking at 4-year numbers, not half-year numbers, we get a number of 13.7. And again, that's a little bit higher than I would like for this company with also their growth profile. I'd prefer that to be about 10 or maybe even less than 10. They also have gross margins of 92%, which is fairly typical for these type of companies. So there is growth there, but I would prefer a little bit stronger growth for a company with a valuation of over 600 million. Now let's have a look at their most recent Appendix 4C, but before we have a look at that, I just want to go back 1 year in the past to the September quarter, which is their third quarter for 2020. And I did get a little bit excited when I saw this quarter because I was a shareholder at this point in time, and this was an operational cash flow positive quarter for Nitro. And I thought this could have been a very important inflection point for the company, and I'd hoped they maintained being operational cash flow positive on a quarter-by-quarter basis from here on in, but they've decided for some reason not to try and achieve that, and you'll see that in the most recent Appendix 4C. But receipts to customers in this quarter, $11.6 US, and they were operational cash flow positive by a small amount, but it's still positive, 384,000. Now, in this particular quarter, they did not spend any money on investing or financing activities, so that 384,000 went all to the bottom line, and they actually grew their cash on hand during this particular quarter and finished it with $44.4 million in the bank. Now, onto the most recent quarter. This is the September quarter, or the third quarter for their financial year. Receipts to customers had increased from 1 year ago up to $14 million US, but they were not operational cash flow positive. They were negative by $1.3 million. So how did we go from increasing receipts to becoming operational cash flow negative? So let's have a look. Receipts were up 2.4 million, and the main reason they had become operational cash flow negative was because all of that receipts growth went straight into staff and administration costs. Those two costs adding up to $4.2 million increased from 1 year ago. Product manufacturing operating costs almost stationary or about the same as the previous year. And administration and marketing costs actually down $300,000 from 1 year ago. So all that increase in cash receipts went straight to staff and administration. They also spent in this quarter $6 million on intellectual property. It doesn't seem like it's an ongoing cost. And because they were operational cash flow negative, and that spending of intellectual property meant their cash on hand actually fell from 38.8 million to 31.4 million. A lot of investors in this space look at the growth in annual recurring revenue through time, and that gives you a good idea of how a company is growing. The other thing I like to look at is cash receipts, because this also gives you a pretty good idea of how the company is performing. And we do have 8 quarters of history for Nitro, and I do prefer to at least see 8 quarters of history before determining what sort of growth or lack of growth we see in cash receipts for a company. And for Nitro, there is growth. But when you look at the cash receipts over the past 2 years, you have to say it's fairly anemic for a company with such high valuations and for a company that is expected to grow quite quick based off that valuation. So compound quarterly growth rate of only 3%, which does seem fairly low, and they've grown receipts from $11.4 million, which was their first quarter after they listed on the ASX, to $14 million in the most recent quarter, which was a record quarter for the company, but still not that much more than the first quarter. Now, you could say or argue that they did go through COVID-19 just after they listed, and if you take the growth rate from the March quarter 2020, which was only 9.1 million, you would get a greater growth rate. So we'll probably take that argument, but still, I would prefer stronger growth for a company that is valued like Nitro. And that's just my opinion, but that's still, I think, a valid opinion that I would still like to see stronger growth for this company. Onto the daily chart for Nitro, and this goes back to just after they listed on the ASX to about February of 2020, when the share price just before the COVID-19 financial panic reached about $1.70 or 80 cents. During the panic, the share price fell to 75 cents. But then, just like a lot of other companies on the ASX, recovered very quickly, got to pre-COVID-19 levels by May, and then just kept on rising through the rest of 2020. And the share price reached a high in October and November at about $3.60. Then for the next 6 to 8 months, share price really did nothing. This was really struggling to get any higher from those October and November 2020 highs. But from a period between about June and November of this year, share price looked like it wasn't an uptrend, a slowly grinding upwards trajectory, but still the share price was going up and actually did reach a high of $4 towards the middle of November. But from that high of $4, the share price has been under lots of pressure. In fact, the share price has moved into a downtrend and a lot of negative sentiment behind this company. And that negative sentiment, or the shift in the sentiment, has coincided with an acquisition the company made and a capital raising. And there was 2 consecutive days at the start of December when the share price fell between about 9 and 10% in that one day. It was consecutive days, and that seemed to really reinforce the negative sentiment behind the company, and the share price has kept on falling from those 2 consecutive 9 to 10% down days. Share price recently had a little bit of a bounce near $2.20, and there is a support level, I'd say it's a weak support level at $2.10. That was a previous low we saw in March of this year, and if the share price falls below that support level, that would be fairly bearish. So at this point in time, I've just kept Nitro, or keeping Nitro, on my watch list just to see what happens with the share price over the next few weeks, to see if that $2.10 support level can be broken. If it can't be broken, that would be good news for current shareholders. So just because the share price is in a downtrend or new downtrend, and because there is negative sentiment in this company, no reason for me personally to be holding Nitro shares at this point in time. That's all I have for this update to Nitro Software. Share price down 40% in 1 month during the month of December 2021. If you are a current shareholder of this company, I'd love to hear your thoughts about what's been happening in the past month, why you think the share price has been under pressure. Was it because of the acquisition and the capital raising? I'd love to hear your thoughts, and also your thoughts about the future of this company. I do think there is potential, but I'm just a little bit wary about the valuation right now and the fact that the share price is in a downtrend and there is negative sentiment behind the company. So leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.